Folks, big news, big news. The Dow was down over 600 points beginning of the week. China is still rattling Wall Street. So the question is, where do we go from here? Are the markets still going to sell off? Are they going to go higher later in the week? Is it safe to enter the water? That's what we're going to talk about in today's video. And I'm going to talk about the best stocks to buy right now in the current market climate. Let's get into it. Should you still trade these jittery markets? Yes. And I'll show you how to do it without any crazy leverage, penny stocks, forex, futures, or any risky securities that could wipe out your account. Click the button below this video to find out more. Now, let's look at what we should be trading. So the question really boils down to, can you still trade momentum stocks in a shaky market? Yes, you absolutely can. Let me explain to you why. First of all, no matter what happens in the stock market, no matter if we're in a bull or a bear market or in a sideways market, it doesn't really matter. Some sectors are always going to lead. So if the stock market becomes bearish, you still have utility sector, you still have industrial stocks, you still have materials, okay? Some defensive sectors will always lead. So as long as there's momentum, as long as stocks are moving and there's volatility, you will always find a sector, even in a bearish or a shaky market, that will lead. For now, we're looking at utilities and stocks that are not impacted by China too much, such as basic materials and companies that keep or maintain their focus within the US and don't have cross-border exposure, okay? So there's always some stocks rising in momentum. All right, number two, institutions. Institutions are always accumulating. The question is, what are they accumulating? And whatever they're accumulating is running up in momentum. And the way we analyze momentum is we don't presuppose what stock. We don't say, well, this sector is going to lead. We let the sector lead and take us there. We want to see momentum before we look into the sector itself deeper, okay? So there's always a sector, always giving exposure and momentum, no matter what market cycle is in, no matter what the market's doing, okay? Remember that. When markets are in the beginning stage of a bull market, you'll see tech and you'll see consumer discretionary leads. But when markets get a little shaky, typically we see bonds rally and we see utilities. Utilities really take off. The sector, the ticker symbol for that is XLU. Take a look for yourself. Whenever you see stocks reaching for the 200-day moving average, you'll see utilities bolt up and begin trading alongside the bond market, okay? Good tip for you there. Number three, the S&P right now, the S&P 500, we just broke the 50-day moving average. We're slowly making our way back up, but the big gauge, the major thermometer for bull versus bear market is the 200-day moving average, not the 50-day moving average, okay? And we still have ways to go before we penetrate or break the 200-day moving average. Right now, stocks are still above the 200-day moving average. So while we're still shaky, we're looking at pullbacks right now. And major stocks like Microsoft, UTX, Facebook, they're all pulling back, but most of them are still above the 200-day moving average. So right now, you're looking at a pullback situation, not a bearish market. And sometimes these pullbacks snap up and pick up momentum. And I really mean that. And a lot of large caps are doing that right now as we speak. And number four, lastly, and maybe one of the most important factors, volatility. One of the indexes, one of the major sentiment indexes I look at is the Vix Index. The Vix Index, which is $VIX, tracks the S&P 500 at the money options, the volatility levels of those options. And what you have is, you have a leading indicator that tells us the fear level in the market. And the VIX Index is synonymous with fear in the market. And this whole China, US worry, this whole period of time that we're in right now, the VIX rose to about 20 last week, and now it's coming down again. The threshold for fear is 20, and I believe it's right around that level right now. It didn't go to 30, it didn't go to 40. It went slightly above 20, and now it's coming back down. And as soon as it hits the moving average, which is about 16 or 15, it'll continue cooling off. And that's telling me The markets are shaky, but right now, as we're standing here, we're just seeing a pullback. We're not seeing a reversal. I still believe this is an amazing opportunity. Fundamentals, folks, federal data, Fed data is best since I've been alive, okay? That's how strong Fed data is. So once this hiccup with China and US gets resolved, we're back on the right tracks. So I believe markets are shaky, but I believe this is an amazing time for pullbacks and, most importantly, momentum stocks that are being driven right now and being accumulated by funds. I'll talk to you soon. Want to learn more about which stocks you should be buying and selling right now? I have some specific blue chip NASDAQ stocks and options in mind. Click the button below this video to watch the free training video I recorded for you. In this market, you've got no time to lose. Educate yourself. Register for the free training now.